Nat gas is under pressure on Tuesday after the long Memorial Day holiday weekend, amid concerns surrounding the passage of the debt deal in the U.S. Congress, after several Republicans have stated that they will not vote in favor of it. At the same time, prospects of lower demand, especially in China, added further downward pressure. The Iranian oil minister said on Sunday that Iran no longer has gas condensates stored offshore thanks to its increased exports of the product. Iran had 87 million barrels of gas condensate stored on board offshore vessels, but the country has managed to increase its oil and gas condensates exports through energy diplomacy. The average gas output in the U.S. lower 48 states increased to 101.7 billion cubic feet per day in May, surpassing April's monthly record of 101.4 billion. In contrast, Canadian exports have declined to a 25-month low of 6.4 BCF per day on May 17, from 8.5 billion on May 4, as wildfires in Alberta have compelled energy firms to curtail oil and gas production. Traders are expecting the weather patterns to remain unfavorable for nat gas prices in the first week of June. Localized areas have limited high temperatures reaching the 90s, while pleasant temperatures in the 70s and 80s prevail across most of the United States, resulting in light to very light national demand for natural gas. Meanwhile, much of the weather data favors a hotter U.S. pattern, gaining ground in the second half of June, although the nat gas markets are suggesting they need better proof of it. Technical and fundamental analysis indicates the bearish trend is still intact. This assessment is being validated by today's early weakness. Unless there is a major shift in demand, favorable weather conditions and rising production are expected to weigh on the market. From a daily technical viewpoint, gas is trading on the weak side of its daily pivot at $2.50, but above the nearest support at $2.25. A sustained move under the $2.30 level will indicate the short-term selling pressure is getting stronger, with a retest of the multi-year low at $2.20 as the next likely target. Meanwhile, a sustained move over the pivot at $2.40 will indicate the buying is getting stronger. This could lead to a near-term acceleration to the upside at $2.50, the nearest target.